What does it actually mean when they say it's a seller's market or a buyer's market in housing? Aren't there sellers and buyers in the market the entire time? How could it only be one? It's just a broad way of describing supply and demand. What has more than the other? Buyer and seller markets have been swinging back and forth for generations, but let's go into what they actually mean and how it affects a real estate transaction. It really all comes down to who has more negotiating power in a transaction. When we say buyer or seller market, we're either saying the buyer has more negotiating power or the seller has more negotiating power. Let's start with the seller's market. A seller's market means that there are way more buyers than there are homes for sale, making it in favor of the seller. Their homes may be selling way more quickly with a lot of offers, giving the buyer really no room to negotiate because they're just trying to outbid the other people. The seller has all the negotiating power. They have all these offers to choose from, and they can go back and forth and try to get the best deal for themselves. A historical example of this, and to show how it kind of swings back and forth, is post-World War II during the baby boom. Veterans returning from the war caused a rapid growth in families and thus a rapid growth in home demand. They were definitely in a seller's market back then, but as we know with supply and demand, it eventually swings back. So that demand post-baby boom caused the rapid expansion of new home construction, fueling what we now know today as the classic American suburbs. A buyer's market is exactly the opposite. It means that there are way more homes for sale than there are buyers looking to buy them. Listings will sit way longer on the market, and it gives buyers the negotiating power. Can negotiate things like lower prices, home repairs, or help with their closing costs. After the 2008 crash, there were a ton of foreclosures and tighter lending practices, basically eliminating any potential buyers. Buyers with cash and investors had the biggest advantage to buy homes back then because they had all the negotiating power. Now, how exactly do we measure if it is a seller's or buyer's market? We do that by what we call months of inventory. So if there were no new houses for sale starting today, how long would it take all of the current houses on the market to sell? If that number is above 6 months, it means that the houses are on the market for longer, clearly indicating there's not a lot of buyers, meaning that we are in a buyer's market. If that number is below 6 months, it means houses are moving faster, meaning that there are less houses available than potential buyers, making it a seller's market. If that number is somehow perfectly 6 months, that means we are in a balanced market. Have we ever had a perfectly balanced market where there was just enough houses for just enough buyers? Kind of, not really though. Since 2020, we've seen that we've mostly been in a seller's market, meaning that there are way less homes for sale than there are people wanting to buy them. But with the classic rules of supply and demand, just like my baby boomer example, we're going to see a lot more home construction, hopefully getting us to a balanced market and maybe even potentially a buyer's market. My name is Tim Albrechtsen. I am a realtor in southeastern Wisconsin with the Goodland Collection and Keller Williams. And if you want to stay up to date on the market, especially in the Milwaukee metro area, or you like home tour videos, or you like home history videos, or just advice about buying and selling or anything, or all the other silly little things I do, give me a follow and I will be happy to help you.